What are my thoughts around what's going to happen in Australia's property market in the future? Now, I've got a couple of thoughts on this, obviously, after looking at all the detail that we've gone through. Now, look, first things first, the debt snowball will continue. Second of all, the rise of urban centres will continue. And third of all, there are trends that are going to continue into the future. So let's get into it. So, look, debt obviously over the course of time has just continued to increase year after year after year. And I don't think it's any secret as to why that is. The government has just continued after the 70s, every time something's gone wrong, to print more and more money. That's all they have done. That's all they're going to continue to do. Now, I brought this graph up previously and I'll bring it up again. As you can see, obviously, we're going into the largest amount of debt we have had in our history, and that's only going to continue. Probably the next time we have a global financial crisis or a major market correction on the horizon, they're just going to inflate the crap out of everything like they always do. So, look, that's going to continue. And what's going to happen with that is that all the debt is going to go into solid assets and all the inflation is going to go into solid assets as well. So you're going to see in Australia, especially as I previously discussed, with all the wealth going into property, people like basically forcing, or should I say, putting all of their money into real estate and letting it sit there and not selling it. Holding periods go up, therefore prices go up further and further. So that is due to continue, no doubt. Another thing I did mention was the emergence of regional economies. So, look, one economy I do really like is Geelong. Obviously, Victoria, a lot of people would argue that the government in Victoria have been very poor performing in recent years, and I don't disagree. However, despite that, Geelong has actually performed very well. So if you look in this report, and this is from KPMG, and this is actually your current, you know, recent years, and it's actually a blueprint report for this financial year that's actually just about to finish. The gross regional domestic product has basically outpaced both the Victorian and Australian average. So you've got industries that are like really, really doing well over in places like Geelong that are going to obviously create more jobs, create high paying jobs as well, and fundamentally lead to good outcomes for the actual city. Now, Geelong's not the only one. Another city that I would argue as well, largely, is Newcastle in New South Wales. And you can see clearly here, this is just an ABS report. The Newcastle inner city area actually has nearly double the amount of professional workers as to the Australian average. Now, a lot of these professionals are quite highly paid, and that only adds to pressure and adds to property prices in the future. So, in areas like this, you're going to see it continue to increase property prices, and you're going to continue to see the regions increase in terms of their actual economic outlook. They're not the only ones. You also have places like the Gold Coast and Sunshine Coast. Now, they are obviously a little bit more based on tourism at the moment. It will happen a little bit more slowly, but it will happen into the future, especially when infrastructure starts to improve between Brisbane and those regions. That will really change the game. I just think it's probably 5 to 10 or so years behind places like Newcastle and Geelong, truthfully. So, look, that's what you're going to see there. Other parts of this is as well, look, obviously, no one would doubt that markets have cycles. So, look, you have times where markets go bananas, you have times where markets do very poorly or might even do nothing and go flat for a long period. So, an example I want to give you is this is an actual extract with in inflation adjusted dollars from 2007. Now, 2007 was basically close to the peak of where Perth's property market basically it was basically the peak of it where it hit. So what you'll see here is it's actually the second most expensive city in Australia. Now, like fast forward that to 2020, what happened was it went right down to being the what's that seventh most expensive city in Australia. Now, obviously, that's changed a bit since COVID, but the point I'm trying to make here is that just in general, markets have cycles. So Perth and Brisbane did very well between the years of 2002 and 2010. but then did very poorly in the preceding 10 years, whereas Sydney and Melbourne, the preceding 10 years between the years of 2010 and 2020, where Brisbane and Perth did poorly, did very well. So all I'm saying here is markets have cycles, and that is going to continue, and certain markets are not going to correlate with others. So that's where the real opportunity is in buying properties, because you can use your equity in one market that has done very well to then invest in a market that hasn't done much, and then ride the whole growth cycle of that market, and then go back to the market that you originally invested in that might have gone quiet for that time and buy there again. So that's how you can make a lot more money in the market and use it to your advantage. Just make sure you're buying in the right pockets of every city, or should I say regional town. So, furthermore, we have the actual property prices in each city. Now, this is only released very recently. This was actually released in, I think it was October of 2023. And you can see what prices they expect each city to reach by 2030. Now, if you look at it here, you can clearly see Sydney's going to go above 2 million, Melbourne and Brisbane are going to go above 1.25 million. Now, you can see Perth almost crunching 1 million, which is quite good as well. Most of that will go into certain areas, and that will really bring up the average of Perth. But look, I do think something like this will happen, definitely. We just have a continual shortage of supply. People don't sell their houses, therefore the equity stays in the market. And continually as well, people just value property over anything else in Australia. So this is set to continue. Not only that too, so this is actually pulled out of the Aussie Home Loans 25-year report, going out to from 2018 to 2043 here. What they expect if trends continue to happen in the years up to 2043. Now you can see house prices, which is what I'm going to be focusing on here because that's all that I buy. That Sydney will hit 6.35 million, Melbourne close to 6, basically Perth nearly 2.5. Brisbane close, nearly 2.25 million, and then you got Canberra almost 3 million as well. So pretty crazy numbers there. But look, I actually think, funny enough, this is probably very accurate and probably quite close to being true. I don't think after the COVID boom, despite what most people just said in 2018, anyone would probably disagree with that. It's just seeing what's happening and what's going to continue to happen, in my opinion. Now, what I genuinely think, though, is about this Sydney, Melbourne, and Brisbane especially, that number of 5.8, and 2.25, whatever million it is, I think that number, on average, they might say it'll actually be lower, but it won't be low in the genuine parts of the actual cities. It'll actually be higher. Now, the reason being is because what over time happens is the actual data they collect actually includes areas that haven't previously been a part of Sydney, haven't previously been a part of Melbourne. So, for example, in even these actual reports of CoreLogic, the Sydney actual metro region they count as, they actually count it right the whole way out to the Blue Mountains. So I think it's right out to Mount Victoria, and then also right up to, I think it's Doyleson on the Central Coast. Now, for me, Sydney is only genuinely the actual region of anywhere south of the actual Hawkesbury and anywhere north of basically your Port Hacking River and basically east of your Great Dividing Range. That's your genuine Sydney for me. But when you include other areas in it, like they do, it brings the actual median price down. Now that's not only included to Sydney, but Melbourne, they've actually just included the Melton region as well into Melbourne. So that's obviously, you got properties in Melton of $400,000, $500,000. So it's obviously going to bring down the median price of the actual total of Melbourne because they're bringing that region into it. So that's something that just keep in mind. Brisbane as well, if as trends continue and they start to bring in places further south and further north of Brisbane towards the Gold Coast and Sunshine Coast, it's obviously cheaper than the actual Brisbane, should I say, metro region. So what's going to then happen there too is that's going to bring down that median. However, the traditional area of the actual Brisbane CBD is going to be significantly more expensive. And I'm telling you right now, this report says that Brisbane hasn't performed well, but if you look at the suburbs that are, within 10 k's of the CBD, they have performed almost as well as Sydney and Melbourne suburbs, and they will continue to outpace that. by 2043, I'd say there'll be a lot of suburbs in Brisbane that are even above $4 and $5 million, and I've no doubt about that. Sydney will have suburbs that are above 15, Melbourne probably above 12 million. So that's going to continue in the future. So your time is now to get in the property market, most definitely. Thanks so much for watching. Please subscribe to the channel, and if you're looking for a buyer's agent in Australia's best performing suburbs, be sure to reach out via www.compoundinvest.com.au. The details are below. Thanks again, and welcome to the channel. I'll see you in the next one.